It is Thursday, the 13th of June. Almost said
Almost May. Now it's June.
Now
It's going to be July. 4th of July is coming. The year is marching on.
Yeah, it really is. It's just unbelievable.
You know, I said on our show just a few minutes ago that as we went into Wednesday with all the news and all the stuff we followed to get ready for the day, it was almost as if the carnival was coming to town. And what I mean by that, the news feeds were excited about what Jay Powell was going to say in his 2:00 meeting, and was excited about the potential of inflation. And for whatever odd reason, they thought in a day with two big events, well, that's as good as the carnival in town.
Well, let's just say this country is in the midst of a carnival.
I'll take the inflation numbers. You take what Jay Powell said.
All right.
Inflation numbers came down. Now they're still up. Overall inflation 3.3%. It was down from 3.4%. So there was giddy and excitement, and somebody won a little bear because it went down a tenth of a percent. It was driven primarily by gas prices. You have seen that at the store or a gas pump when you go there. I see it there. But I still don't see food prices giving up that much. Going to the grocery store, it's still a head scratcher that I got such little and I'm paying a lot. Absolutely. But overall inflation is easing, and that was what was everybody's excitement on Wednesday.
And Jerome Powell basically said that inflation is still with us, but we're starting to see the waning of inflation. I'm paraphrasing, but I think he went on to say that probably one time this year, maybe two, but I think it's going to be one. And then we got an interesting little factoid that 5 is what they're believing are going to be the rate cuts for 2025.
So you got a new slogan.
5 for 25.
5 for 25.
5 for 25.
Yeah. We had 6 for 24. It didn't happen. So I hope 5 for 25.
So it'll still be a total of 6. It'll be 1 this year and then 5 next year.
So that's how they'll do it.
Yep.
I think the odds makers, September is about a 65%. It's September, November, and December. September is about a 65% opportunity. Jumps to maybe 75, and then by December it's about a 95%. So odds are being pushed. Certainly by the end of the year, it's 95%.
And we feel that there's probably a lot of pressure on the Fed, especially Jerome Powell, to lower rates just because we're carrying so much debt. And even 25 basis points reduction would have an impact on just the servicing of all of that money. So I think that one in 2024, and then we'll see what happens in 2025. That's too far ahead, but I think that's where we're headed.
In the stock market world, interesting conversation. I'll call them bookend conversations. The weighting of the S&P driven primarily by the Magnificent Seven. Now that's the top 3. It's Apple, NVIDIA, and Microsoft. We just reported that those 3, or the technology space in the S&P, has a 42% weighting. They make up 42% of the weighting of the S&P 500.
And the Magnificent Seven is bigger than any stock market in the world except for China and the U.S.
All right,
it's amazing.
You got discussion about that, of how much you ought to be in. We've talked to clients this week about taking some gains off the table. We've talked about with new clients that we ought to be in parts of it. So that has an active discussion in what we're doing every day with the clients. On the other side is something boring and slow, but it needs to have discussion with what we're doing, and we're giving it to you, about utilities as a boring, slow income replacer, as something that has a good buying opportunity, but is something you just said a moment ago can touch AI.
Can touch AI because you've got to have the power for AI, and additional power comes from power companies, right? Utility companies. So I think we're going to see in 2025 that become more of a mainstay for our portfolios, because it does give us a good dividend, and it gives us I think a progression into an area that is going to continue to grow rapidly.
Our bonds still remain on a very short-term basis. Here is the 13th. Within 2 days, many of you have a corporate bond maturing. We got it on our calendar to pop up. I got it on mine to have a lot of conversations next week what to do. We still remain short-term. That is the better rate section to be in. But if we get closer to December and it looks like rates might come down some, we do believe we might extend it just slightly with part of that money. However, you and I reported that even by 2025, 2026, it's going to take the Fed that long to get to the 2% inflation rate. Yeah. So it's not going to be a rise in short term to intermediate in a hurry, because I think it's going to take a while. But we continue to look at it on a daily basis.
Yep.
Yeah.
So we're still just in a kind of a wait and see mode. I do think that if interest rates are lowered, that'll be a good signal that we would look at putting more money to work in markets.
For our clients down in Florida, y'all stay dry and stay safe, especially in the southern Florida area. And for us up here in North Carolina, it's going to be a hot weekend. We're here each and every week because we enjoy it. We want to be with you. We know how important you are to HMC Partners, but it is your money.
And your money matters.
See you next week.